structure, these arrows, as you've seen, it's an M. It always comes like this. It's very rare to see the structure. It's very rare. So when you find it, especially in a higher time frame, like the daily, like this, you have to be ready. So this is a kind of, this one is just a kind of, but yeah. So as you can see, this is something. It comes in different ways. That this one is when you zoom in, that is when you see it like this. So as you can see, this is an M. And what happens with this structure, guys, this is what happens with it. When you have this structure, this is the resistance, this is the neckline. So with this neckline, what happens is if price comes down here, this is where you make the money, and breaks below this neckline, it comes down a lot. It comes down, and this could be here. Price, since it broke this neckline, it will come right down here for the lowest low. It always comes and hits the lowest low. So that is what I was explaining in the previous video. So already it came and it hit. What happens next, guys, is if it breaks first this moving average and start trading above the moving average, yeah, it might still continue to come back down. But when it breaks this neckline, guys, when this neckline is broken and price is trading above, first just take your profit here. This is the first thing you have to do. You know, you will take your profit here, and if it breaks here, guys, it goes right up. Yeah, goes right up here. If it mistakenly, if price breaks this level up here, it goes right up. So that is the thing with this structure. That is the good thing with this structure. So right now, as you can see, having that in mind, first we took our profit in the previous video here, because let me delete. I didn't want to kind of like remove it before making the video. It will be like I just come in now. We have to be very clear. We have to be honest with ourselves. I haven't gone beyond this. I want to go with you now. So this was a very clean and very good signal. So we sold and we made money until it formed another. When I say money, it means pips, because this is basically practice, and this practice is real because exactly what happened in 2018 is this, and what happened in 2018 can still happen. It's the same patterns and the same structure, the same thing that will happen 2028, 2078. It will still be the same thing, guys. So that is the reason why we can use mechanical uh, the charts. We can trade mechanically, and we can use technical analysis or mechanical analysis, sorry, to actually trade. That is the only reason, because price gives us patterns to follow, and we follow those patterns and we make money. So right now, this is a very good signal, and there is nothing you can even at this one now, guys. We are expecting to continuously, if price breaks here and comes here, then we will be buying continuously right up. But before then, one, we never know, it might just want to continue down. This might just be an event, maybe an FOMC that happened, or a, was it on a Friday? No, this was Thursday. So this is not an NFP, and it's January 19. This is not an NFP. It might be an FOMC. So that is why we don't want to be so confident. But if not, this is a very good buy, or a reversal signal and a confirmation at the same time. So we're gonna enter, guys, straight away. It's gonna be a very, very long uh, stop loss. So we just enter with the least lot size we can. then we're going to be adding subsequently. So 1.2509, 1.219, 1.2519. Always add 10 pips above your stop loss to give oops, to give price room to breathe. Okay guys, so this is very long, but trust me guys, it's worth it. So first we're gonna wanna take our profit at the neckline. I might wanna take here, but it's so good that I know price is gonna crush. It's gonna crush this level because this is a good signal. You don't see this all the time guys. You don't see a signal like this, even the structure, because what makes this signal so good is because the structure, as I explained, the market might be on the process of crossing this neckline, and if it crosses this neckline, we'll be taking it here, and if it crosses here, we're gonna be taking it right up there. So what institutional traders will do, because those people they have so their how can I say, their emotions, they are stoic. So these people, they might even want to look at the possibility. This is for swing traders guys. When you see these hedge funds, um these people that trade with your money, this is what they do. They go for how many pips? This is 1.2518, 1.3, this is almost like 1000 plus pips. This is what they go for. Yeah, and if it breaks, this is the next place we'll be expecting to take TP. So 1.37 right down to 1.3, that is 700 pips. That is 700 pips right down from 1.3 to right down to okay, that was 700 pips to 7 here, 1000 pips. 1.27, 1.25, so 1200 pips guys. So we are looking into 1200 pips. So trust me guys, if you get, so now you see that your stop loss is not big as you think, as you thought. So these steps are for those who are not stoic, those who still have their emotions hitting hard on them. So you can't be taking your TPs. You can take your TP here. This is a trend line. It might reach here and do something. It might reach here and come back. Okay, no problem. So let's watch out guys. Let's see if what I'm saying, if this works like this, then just when you are done with this video, start looking for this structure. I've been trading this structure for so long and I'm so confident. So it's triggered guys, by the way, it's triggered. So we are in profits now. We are in profit. We are back. Whoa, okay. We're in drawdown, back in profit. Wow. So first TP hit for those wanted to take just how many pips? 2518, 2, that's 100 and 109 pips, 111 pips by the way. So wanted to take 111 pips, no problem. But as I said, the neckline, it's supposed to be your next target. The neckline guys, the neckline. So or we enter the neckline and the neck is going to break the neckline. Why? Because of this. Oops, sorry guys. That's 119. Oh, let's leave it at 20 because of this candle. Yeah, because of this engulfing. This is a good engulfing, guys. You see this engulfing here? It's above the moving average and it rejected the moving average with a somehow harami here. Oh no, this is not a harami, but this is a good signal, that a good confirmation also. So no need to enter another. This is, by the way, we start here with a very small lot size. This is where we increased. This is where you add more. Yeah, you add more here. Wow. Okay, guys. So I will start asking some of you guys to get out here if you were trading, because this is a trend line. You never know what happens here. So if you're an institutional trader or you want to trade like them, you just hold, because already at this point, guys, it's hitting here, no coming back. See, that is it, guys. That is it. Wow. So we are already talking of a trend. It did break the trend line already. So this is the point I was making. This is the point I was making. So already we now have another confirmation that if it breaks here, it's going to go right up, because a trend line is being broken already. So it's coming back to retest the trend line. See, it did retest the trend line, and right now this either is a lower high. This either is a lower high, because this is slightly below here. If it's a lower high, it means okay, it's going to continue to go down. But if this breaks now, this one will be expecting price to break also this resistance, and then if it breaks this resistance, guys, boom, we are gone. So as I said, that's it. That's it. This is one of the best strategies and the most safe strategy you can use out there. As you finish doing this video, guys, you go back and start looking for this very structure I'm talking about. So as I said, if it breaks like this, we should be expecting price right here. It did break, came back and retest, went back and it's struggling. With this uh, double bottom to this top double bottom sky, it's kind of telling us something. Price might reverse here, these double bottoms. It's at the daily. If you go down to the 1 hour, you'll see a very good curved, I mean a very clean out double bottom. So as I said, already at this point, uh, it's already like, it's already a good one, guys. Imagine you enter here and you hit right up here, guys. You want to go out, except you are the most greediest person on earth. So the only thing you can do is, can be pushing up your profits, I mean your stop loss. So if you now bring up your stop loss and put it here, how many pips you are losing? You are losing a lot of pips. So you don't want to lose that much pips. It's more than like, it's almost 700 pips. You don't want to lose 700 pips just because you think you're gonna get more. So you just get out. But as I said, guys, for institutional traders, they know, they are very good, and I'm one of them my own way, because I did learn from them how they do trade. That's why I'm applying it here and it's going. Yeah. So as you can see, guys, so also here price actually broke here, came back and broke here. I don't know, right now I'm just floating because whatever the case, guys, we just wanted to kind of uh, make 1,000 pips, and I think this is 1.343423. We entered at 1.25. uh, that's already 1,000 pips, I think. 1.2534, yeah, almost 1,000. I think it's already 1,000 pips. Okay, guys, but as I said, this, if it's a daily time frame, that's a lot of pips. But if it's a 15 minutes time frame, you might be going also about 100 and something plus pips. So it's a strategy that will work for every time frame, every single time frame. It will work for it. So guys, this wasn't bad. This actually proved uh, our structure, the strategy of our structure. It's working. All we want to do now is see if it's gonna come right up here. But unfortunately, guys, it didn't reach here. But all, as I said, this was supposed to be the other level, so we take these levels and we are good with that. So guys, so this is the level I was talking about. When you look at it carefully, you will see that, because another there is a video, I have videos on how to trade breakouts. So this was actually a breakout, but these bottoms, these double bottom stop, these double top bottoms, they're kind of like, no, this is something you have to be careful when you see them, because they are buy confirmations. I mean, they are reversal confirmations. Yeah, they are reversal confirmations. This was another one, but it was at the middle of the it was at the middle of the resistance. So you don't want to consider this a very good signal, which is actually just at the middle, unless it did break above here. So even when this one broke above this level, it came back and it formed a sell signal, which is still the signal, by the way, that is still going on till now. Still a sell signal, by the way, because this was actually a sell signal. This was a reversal confirmation. This is now the sell confirmation, and it's still that one till now. So, but we were more focused only on our, like, we wanted to make our 1,000 pips. So that is it, guys. When you're looking for 1,000 pips and price gives you, when you're looking for 1,200 pips and price gives you 1,000 pips, you should be very happy about it. Should be very happy. So thank you, guys, and make sure you like and subscribe. This is a 1,000 pips strategy. If you are less greedy, you'll get out. If you are more greedy, you will lose whatever you made. So already it confirmed that it's a strategy that we can trust. It's a strategy that we can add our bank account, I mean our trading account, and actually make money out of it. So thank you, guys, and see you again in the next video. Thank you. Ciao.